Hello, today is Saturday, August the 14th, 2021. We always start with our disclaimer. We go over our calls. We make some predictions for next week and the weekends when we normally talk more about the long-term picture, so let's do that. This is my trading plan for Monday, August the 16th, 2021. Just remember, it's my plan. It doesn't have to be right. It can be completely wrong. Any trade should be at your own risk. Look for the pattern with the early high, which is right here. I guess there are some people who could interpret this as being the early low because it was kind of a straight line. We didn't move very much, but I think it's the early high. And on Monday, I'm looking for the pattern with the early low. We said a few things. We had a normally bearish pattern that was bullish instead, so there should be higher prices. But we also had lower MEJT targets. Normally I use the mixed signals rules, saying the commonest thing is a gap and a prompt move outside the day's range, which is what happened. But I didn't say it, and what I said was I thought it was possible that we could have higher prices and also hit our targets, 44.50, 72, and optionally 44.51, 23. And that didn't happen. So we got the higher prices. We didn't get the targets. The optional targets time has run out. So we'll cross it off the list, but we'll add this other MEJT target, 44.50, 72 to the list. We now have, I'm going to come back to the longer term picture in just a minute. Let's go over what happened on Friday. We had a MEJT buy signal with an optional lower target. The optional lower target was satisfied here. The higher target, the buy signal, had to take out this high, which we did right here. When you take out the target, there's resistance, so the close was at resistance. This rally was called to be false, called for a drop, and that's already happened. So all the targets from Friday's patterns have already played out, and the close is at resistance. Now we gapped up, hit a higher high, but with 5 minutes left to go, the close was under all the prior highs of the day. And here we closed there, that's a negative pattern. Either you gap up, hit new highs promptly, or lower prices print. So how did this rally in the final 5 minutes change things? Well, I think it made it even more negative unless we followed through at Monday's open. We had all day to clear these highs. Couldn't do it. It showed serious money wasn't interested in playing along. This is a wall into the close. These are highly likely to gap down when we open Monday, at least under this low and preferably under this one. And if we gap under this low, it's likely we gap under the whole trading range. And if that happens, it means this whole rally doesn't count and was a false move. It doesn't have to work. We don't have to gap down like that because when you're this close to a new all-time high on a Friday, especially, you can follow through. So if we gap up and follow through, which is possible, we could continue higher. But if we don't, and if we do get the gap down, it's a negative picture. Now this was the DeMark sell signals, and these things have repeatedly failed, and this one's failing again. Although, as I pointed out before, it could be a correction in terms of time, although it shouldn't be one in terms of price. But when these things fail, they usually fail in grand style. We could still be consolidating here, but the important thing to me is if this pattern didn't lead to a big drop, it probably means the rally isn't over. But it doesn't mean we have to go up Monday. And it does not mean we can't have a tradable correction first. It just means probably this whole up move hasn't seen its final high yet. It doesn't preclude dropping first. So, well, we've had a few of these optional targets that failed in the past few weeks. We know I used to have a computer program when I could get exact figures, and I ran this for about a year, and these would print 95% of the time. That's not accurate enough for me. The rest of the system targets are going to print about 99.5% of the time, if not higher. That's why I call them optional. But every now and then you get a whole bunch of these targets which don't print. Right now, we have 10 targets for this year which haven't printed. We have 2 ultimate targets which haven't printed. And we have 7 different weeks in which a target hasn't printed. So how likely is it that we're just going to continue higher and we'll never see any of these numbers? How likely is it they're not going to print? Well, I devised the system between June and August of 2002, so it's now 19 years old. In the previous years, I had 2 years when I had 9 standard targets which didn't print. I've never had one with 10. We've had 2 years where I had 5 weeks with targets which didn't print this year I have 7 so far. And I had 1 year where I had 2 ultimate targets which didn't print. And this year we have 2. So if we never see them, it'll be without precedent in 19 years. Doesn't mean it can't happen, but I think the odds are pretty much against it. I've had this many unfilled targets intra-year before, but by sometime they do fill. I can just show you the statistics and say that's what's happening. So what are the chances we're going to drop now? Well, I'm going to give up on this count because it was a valid count, but it's not the only valid count. And that's just too much of a miss for me, so we have to come up with something else. This isn't the only count I have either, but it shows us ending right here. This could be wave A, and this could be B. And wave C is 50% of wave A right here. And if you look at wave magenta C, you've got A, B, C with a good ratio. And you've got A, B, C with C equal to A pretty much right at the high. I think this is an overlapping wave, and C equal to A always has to direct your attention. Now let's take a look at this last wave, which I found pretty hard to count. Now ignore the colors, because I don't use the same color scheme, because I don't know what the direction is, not direction, magnitude of the wave is. But let's just look at the move up from the low last month. We have this as A, and this is B, and if that's right, you've got a direct hit with C equal to half of A right here, and the ABC inside also works. So I think this overlap has to retrace at some point. Now, multiple time frames, we do have an end to the wave count right here. Now, if we continue up, the count fails. I mean, that's always possible. It's not the only count. But if we drop, at least it's compatible with a tradable drop, even though, as we said when we looked at the DeMark count, I don't think this is the end of the rally. You could still have a sizable drop before the rally continues higher. So if you're a bull, you want to invalidate that by gapping and promptly overtaking this high. But if, as is likely, but not guaranteed with this wall into the close, if we gap down under this low, preferably under all the lows of the day, you could still have a sizable correction before the rally continues. And I think we'll know one way or the other at Monday's open. These are the patterns I expect to see next week. Monday's pattern has the early low. We could still gap up. Typically, it's a rally day, final hour high, but if there's early weakness, it turns the tables. More weakness typically ensues, regardless of how the rest of the day goes. Before the final 5-minute bar, we had a gap up, higher high, and a close with a bar under all highs. It's a negative pattern. Either you gap to a new high or you get lower prices. Rally in the final bar came at a time not indicative of serious buying. It's more likely people didn't want to be short over the weekend. It satisfied the target from earlier in the day, so the close was at resistance. If the move is false, if that last rally is false, ideally we should gap down, promptly undercut the low of the bar. And if we drop far enough, promptly enough, we should see more weakness in the days to come. It's likely. But it's not a guarantee, as walls into the close don't work as well this close to a new high. You could still rally, and you won't know that until Monday's open. The wave count's correct, and that's not the only count, so it isn't a lock. Could have a decent correction here, but I don't believe the technical readings are bad enough to preclude higher prices before year end. Sentiment readings are quite compatible with a drop here, but if we gap up to a significant new high, we don't have to reverse now. I mean, if we hit a new high by 1 penny and then reverse, that doesn't change anything for me. But if it's significant, even though the sentiment readings aren't very good, too many bulls, not enough bears, it doesn't mean we have to drop right now. But if there is a drop, a gap down right from the open, it could have legs. The pattern should have the early low, and that is today's call.